Cześć, Artur Wiśniewski z Stockbroker.pl. Witam Was serdecznie na Pasywnej Rewolucji i zapraszam na panel dyskusyjny o tym, jakie są aktualne trendy na rynku ETF oraz jak dostosować do nich swój portfel, aby był on zyskowny. Hello everybody, thank you very much for joining Passive Revolution Conference. This is a conference concentrated on investing in ETFs, and in this panel we're going to ask the question, what are now the trends on ETF market and how to adjust portfolio regarding these trends. So I'm very happy to welcome Deborah Fuhr from ETF GE. Hello, Deborah.
Hello, nice to be here. Thank you for inviting me.
Andrew Jamiński from Amundi. Hello, Andrew.
Hi, Artur. Thank you for inviting me. Happy to be here.
And Jacek Lempart, ETF Atlas. Hello, Jacek. How are you doing?
Hi, Artur. I'm very fine, thank you. And thank you for having me on this show.
Okay. Deborah, would you mind if I start with you? Can I ask you a question? What are the current trends on ETF market? You do a lot of research in ETF GE, so you might have a wide perspective. So what I mean, I'm wondering, what are the trends regarding passive and active investing? I mean, the funds. What about asset classes like stocks, bonds, or commodities? Diversified funds or sector products, thematics, etc. And what about costs? So could you please answer the question as first?
Sure. So what we're seeing is the growth in the ETF industry has been very significant. If you look at it from a global lens, we have seen 63 months of consecutive net inflows. So that's over 5 years where investors globally have been putting net new money in. So I'm measuring creations versus redemptions. I think that's very impressive. If you look at the end of August, the ETF industry now globally is almost 14 trillion US dollars. So if you went from the start of the year at the beginning of January until the end of August, the assets have grown almost $2 trillion. Over 1 trillion is net inflows. So we are seeing record assets, record net inflows, record kind of monthly consecutive net inflows. We're seeing that ETFs are being used by institutional investors, so pension funds and asset managers, mutual funds, hedge funds, also financial advisors, and increasingly by retail investors. The biggest drivers in the US, which is the biggest market accounting for about 70% of the assets, it is very much a retail market where retail investors are investing in ETFs. And we're also seeing that many financial advisors are using ETFs. What we tend to see as the drivers of where people are putting money to work is really driven by the political, economic, and other news that is out there. The US has been doing very well. We've seen recent rate cut by the Fed. And so when you look at where money has been going, you see a lot of money has this year gone into S&P 500 exposures. And an interesting statistic, of the $14 trillion, 2 is invested in 85 ETFs tracking the S&P 500. Another benchmark that's very popular for investors looking to invest in the US market is the NASDAQ 100. There is about $330 billion invested in ETFs tracking the NASDAQ. And we've seen a real phenomena in Europe where savings plans have become popular. And so investors are putting money in on a weekly basis in many cases, or monthly basis. And if you look, Germany is one of the biggest markets for the savings plans. The most popular ETFs there would be the DAX, which isn't surprising because I think one of the things you talk about often is home country bias. So many investors invest in their home market, and the DAX being the most popular benchmark for Germany. And next you see S&P 500, you see NASDAQ. And then for broad diversification, we see a lot of money going into MSCI World exposure. So I think what we're seeing is most of the money this year has gone into equities, most of it into the US. We are seeing money go into fixed income because there was concern about the markets and where things were going. So a lot of short dated investments. And really we've seen net outflows from commodities, a big story in the US earlier this year was in January, where we saw the advent of the first spot Bitcoin products come to market. And they allowed, the SEC is that I'm referring to, allowed 11 issuers to come to market at the same time. And what we saw was Grayscale converted a fund into an ETF, and then the others were all new. The majority of net money has gone into the BlackRock product, followed by Fidelity. Then we saw money going into the ARC21 shares and Bitwise kind of specialist exposures. And the other products have taken in a lot less money. So I would say when I look at the trends, the other big one in the US is active ETFs. So we're seeing demand from retail encouraging active asset managers to launch active ETFs, or in many cases, they have converted existing mutual funds or separately managed accounts into ETFs because ETFs are more tax efficient. And if you know you're buying something less expensive and more tax efficient, net, you're getting better returns. And so people like the flexibility, smaller size investment, getting in when you want to. And so we've seen those would be the biggest trend. So crypto has been big, active ETFs has been big, and then exposure into the US market, I would say would be the biggest trends we've seen this year.
Thanks, Deborah. One of the things you said that people mostly invest in ETFs in stocks, but this is quite surprising for me because most of people, I mean, if I look around in Poland, they are not very aggressive. I mean, they don't like risk too much. So this is quite surprising that people choose mostly ETFs on stocks. So what could be the reason of that?
Well, I do think for many investors, if you open the newspaper, if you buy one, or open a website, or you turn on the TV, it's hard not to hear about what's happening on the news when the news channel is talking about, did the S&P go up? Did the FTSE go up? Did the DAX go up? Did the WIG go up? So I think for many investors, they hear that. It doesn't mean they're putting all of their money into equities, but for most investors, they will put some of their money into equities. And for many, ETFs is the wrapper that's being used. So it's important to remember $14 trillion invested in ETFs is still a small amount of the global investment array of products that are out there for investors, whether it's mutual funds, investing in individual securities or bonds or other investments. But ETFs are growing, and for many, it is getting access to a broadly diversified portfolio, and equities tends to be something that many investors want. I think the other challenge is many investors don't understand fixed income indices. It's rare that anyone in the media talks about what happens with any fixed income index. So I think the understanding of fixed income indices is quite small. And so quite often that is the second type of product that investors will use. I would say often the next product often is gold. So for many investors, if you want to own gold, that's kind of difficult to do. So buying an ETP that allows you to hold gold that's stored in a vault, just like central banks, has been a very efficient way for many investors to gain access to the gold products.
Thanks, Deborah. Andriy, how does it look like? How does it look like from your perspective? You are one of the biggest players here in Europe.
Yeah, probably I can talk about the European market more as about the American market, but I think one thing that Deborah mentioned is that the appetite for these global indices, well-diversified indices, is definitely a big trend, and it is explained basically mainly through this retail growth. Yeah, so we see that adoption of ETFs within retail in Europe, it's accelerating, and it is already even well established in Germany. I can give you a few numbers so you understand the relation, how fast it's growing, because I think we all hope that probably soon it will be the similar case in Poland. There is one media which does pretty detailed analysis. They gather numbers from different brokers and saying retail clients, how much money they have invested in ETFs. If we look 10 years back, this sum was around 5 billion euro. Then we had like 6 years before Corona, the growth was from 5 to 40 billion. So it's substantial growth of 35 billion in 6 years. But the crazy thing happens basically after Corona crisis in Germany, because according to the last report in August, the assets in the retail market are around 140 billion. So it's basically another 100 billion euro on top, basically in 4 years, so with 25 billion per year. And it is explained what Deborah mentioned also by the saving plans, because people just want to have a very diversified portfolio with 1 or 2 ETFs. To do it as simple as possible for them, it's a long-term investment. They don't care so much what happens in 1, 2, 3 years. They invest there some amount of money. In Germany, this amount on average is around 180 euro. And exactly the indices Deborah mentioned, MSCI World, All Country World, of course, DAX with the home bias are the most popular amongst them. The second trend, I think, which we see, which is a bit more short term, it's fixed income, but specifically so-called overnight ETFs. So in Germany, many clients see this overnight ETF as an alternative to the bank deposit. So they say, because what this ETF does, in the simplified words, is basically you can go to the website of European Central Bank, see what is the ECB rate today, then you can subtract the fee, and it's approximately what you will get into your portfolio. So it's super transparent, and it is very often more than you get from your bank. So for some risk-averse investors, for someone who just starts, we see that in retail also it became a product which started to gain in popularity. Probably the third trend, which was probably not so prominent this year, but if we look back in like 5-8 years back, I think something which is definitely worth to mention is ESG. We cannot miss on it, because if we look in the European market, especially, around 20% of all assets in the European markets are ESG assets, and the trend is rather upward. So there is an appetite. Probably the appetite is driven more from the institutional investors now, but we also see that especially the young population, young people want to invest in ESG, are more interested in this topic. They want to engage, and it's definitely something we see. So if to summarize, probably the 3 major things is broad indices and retailization of assets in the European market. Bond ETFs with a interest rate raise became also a topic. We will see how it will go when now we have basically the other trend in terms of interest rates, and the third thing is ESG.
Thanks, Andrei. Would you mind if I ask you to what you said? I mean, the costs. One of the Amundi ETFs, which were very well received here in Poland, are these new ETFs which invest globally in all world indices, which are very cheap, surprisingly cheap. But they base on selective indices, which are not so popular and they are not so known as your competition have. And the question is, what's the difference between selective and other indices like FTSE All World or MSCI All Country World Index? If you could shortly give us an insight.
Yeah, just probably briefly at the very end, the index providers, even now, we and Deborah, without wanting to do it, we mentioned MSCI as an index because it's a brand. So I think many people follow the brand. It's the same, if you say you're buying a car, you can go for, I don't know, some brand car in Germany like BMW or Mercedes, and it will do a job for you. You will drive from home to work. But I think by the same logic, you can imagine you can also drive not such a high brand car, but it will do a basically very similar job for you. Our task as an asset manager is to replicate the index, and the indices you mentioned, for example, for this super broad index, including developed markets and emerging markets, it's built by the very similar logic. It's of course has some deviation, but at the very end, if you compare it in terms of tracking error index versus index, in terms of performance, historical performance in the back test, you will see these indices are very similar. Just for us, as it is in my car examples, we can offer the product at a much cheaper price if we do not pay for brand. That's it.
Thanks, Andrei. Jacek, how does it look like from your point of view? ETF Atlas is now probably best known ETF portal here in Poland.
Actually, so far the only one, but so yes, actually Andre and Deborah, they said most of the important things. So actually, I can just only summarize. And Deborah is like a walking database, actually. So thank you for all the statistics you provided us. So in general, we can see indeed a strong overall growth in the whole ETF market, in the whole ETF industry. And I just saw some forecasts for European ETF market, and maybe Deborah or Andre can confirm, is that for the next 5 years, the growth is seen like 15% per annum over the next 5 years. So if that will happen, actually, we can say that not only that the European market already is significantly big, because it exceeded already $2 trillion, but also it will grow in the next years. And indeed, I can confirm also that the equity ETFs still have the highest inflow. And I don't remember exactly, but around 80% of all the AUM is just in that asset class, the equities. Also, the digital assets ETFs are on the rise. We can see, as also Deborah mentioned, we can see this in the US, also gaining momentum in Europe. And also, what I would like to actually stop for a moment and to mention more about this is the active ETFs, because they are also growing faster, and maybe they are just taking traction. And especially, I would like to stop here and comment a bit the ETFs, the active ETFs, which we can see are emerging in the United States and which we don't have currently in Europe. Especially, I'm talking here about the managed futures ETFs. We can see a lot of such ETFs in the United States, and because in Atlas ETF we have both American and European ETFs, I can say about this. And I think that it's good that we have Andre here. Maybe they will consider to also do something within this area, because I think that especially that part of the ETF market is worth to look at, especially the trend following strategies, which aim to capitalize on price trends across different markets, and they can by nature take both long and short positions, though, so they can actually make money on any market conditions. And what is the most important thing is that they are not correlated to traditional equities market, especially. So they provide us non-correlated returns. So, and I think that that could be even the main selling point to whoever would like to introduce such ETFs in Europe. And because I think that they have, and historically at least, they had the potential to generate returns that were not closely correlated with traditional stock and bond markets. So especially during the periods of market stress, I think that could be something very, very interesting for the investors. So just to summarize, the overall ETF market is just continuing to grow rapidly, and we can see especially the strength in European industry.
Thanks for sharing with us your perspective on what are the current ETF trends here in the world or in Europe. So if we have more and more ETFs, there are now like 10,000 ETFs in the world, 4,000 ETFs in Europe, more or less. We have more and more options to earn money. So the question is how to adjust our portfolio to this new map of ETFs. I mean, we have more and more bigger and bigger choice. So how to adjust our portfolio to make it profitable? If you ask Warren Buffett, I guess his answer would be buy just one ETF, which reflects S&P 500 and ignore the others. So what do you think about it, and what would you answer to Warren Buffett's potential advice? Andre, could we start with you in this turn?
Sure. So I think what I cannot do is disagree with Warren Buffett. It would be definitely not a smart idea, but I think what we have to take into account is definitely the time horizon. If you invest in S&P 500 and your time horizon is 20 years, probably it's not a bad idea. But if you say you're short before your retirement and you still want to earn some money and in 3 years you need money, we've seen in the history of financial markets some events which would not accept or agree with Warren Buffett, yeah, because if we look in the dot-com bubble, so if we move around like 30 years back and we see how S&P performed, and in the worst case scenario, you buy high, you're 15% short in terms of performance, and then you need 7 years to recover your money to the previous level. So that's a question of a time horizon, and I would not say that there is a universe ETF or universe portfolio which will fill all needs of all investors. I think what you have to look at is what is your time horizon. Try to diversify as much as possible. That's why I think it explains also this demand and this appetite for these broad diversified indices, because now we have a great success story and performance story of US, but if we look backwards looking, it's always easy to say what was a good investment, but if you are more forward looking, it's getting much more complicated and much more challenging. So I think the message is try to diversify as much as possible. If your time horizon is rather short, think about adding probably also some less risky assets like bonds or even these overnight ETFs into your portfolio. And also, the ratio of the investment you put into equities and to the risky asset should be smart in the sense to your total assets. Yeah, so you have to look at it basically as a complex problem and not just situative to say, okay, I go for S&P because it's performed good in the last 2 years, because unfortunately, as we all write as asset managers in our materials, the boring legal paragraph which says the past performance is not a guarantee of your future performance. So that would be my message, yeah.
Thank you very much. Jacek, would you follow Warren Buffett's advice and buy just one ETF?
You put me in a difficult situation to disagree with Warren Buffett because, as Andrew said, it's not a smart idea. So I think if I could only comment what Warren Buffett said is that maybe his view is a bit American-centric, just only talking about the S&P 500. So I don't want to start this discussion here at this occasion. But I think that there are good reasons, there are good arguments for a single broad ETF, as Warren Buffett says. So for example, the first, probably most important argument for it would be simplicity, because making it easy to manage and monitor our portfolio. This is a great thing to have. So the less we have to manage, the easier it is. Probably it's better for the investor. Also, probably it may be very cost effective for the user. Lower costs. First of all, lower trading costs, because we don't have to maybe even rebalance such portfolio. And maybe even the overall expense ratios will be lower rather than having multiple ETFs if the portfolio is more complex. I think also if the portfolio is simple, we may have less temptation to tinker. So if we have more moving parts, we have more holdings in our portfolio, we can be tempted to trade more frequently, which not necessarily will be good for us in terms of our profits in the portfolio. So I think it's worth mentioning here, for example, multi-asset ETFs, because Warren Buffett said only about the S&P 500, but in multi-asset, in a single ETF, we can have, for example, equities and bonds. So within a single ETF, we can have a complete portfolio. And indeed, for probably many, especially less advanced investors, that would be very interesting. However, I think there could be a lot of arguments for a more complex ETF portfolio as well. First of all, we can have more customization for it. So we can tailor our portfolio, having more ETFs in our portfolio. We can tailor it more precisely to our investment goals, to meet our specific needs, and maybe some risk tolerance. Or, for example, I mentioned before about ETFs for managed futures, so it could be a nice addition to such portfolio. And this gives us potential also for higher returns, but it requires, on the other hand, more understanding. So we have to keep it in mind that probably an idea for more experienced investors. As I'm from Poland, I could just quote Frédéric Chopin, who said once that simplicity is the final achievement, and I think he's right, the same way as Warren Buffett. But in general, the complexity probably sells better. So I think that investors, they have this nature need to go further and try to find a better solution. However, regardless of the number of ETFs we will have in the end, I think that we should just have the diversification. That what Andrew said. We should keep costs low, and we should have a long-term strategy. So we should align with our long-term investment strategy. That's the most important thing.
Thank you very much, Jacek. Deborah, what would you say? One ETF is enough?
So I want to reiterate some of the comments that my fellow panelists have said. Warren Buffett made that comment to his wife. So she is an American. So I think it is kind of the home country bias. And in one country, it could work. I think what we're seeing, though, is with many investors today, they end up having different types of portfolios. So one might be very short term to save to go on holiday. One might be longer term to save to put your children through university. And then one might be for retirement. So what you find is one of the beauties today is there's a lot of very smart asset managers creating model portfolios. And a lot of these model portfolios are risk profiled. So if you're a low risk investor, moderate or dynamic, they help you to think about what types of exposures you would want to have. And then what they do is they rebalance back to the benchmark. So they're not trying, unless you buy something tactical, they're not trying to time the market, because I think it's very difficult even for professional investors to beat the market. So I think there's a lot of different ways you can think about investing, but let's pretend that you believed one product makes sense. One thing that you need to be aware of is, as I mentioned, there's 85 different ETFs tracking the S&P 500. And so I'm not a tax advisor, so you should get your own tax advice. But for investors who are taxable, so most retail investors would be taxable, if you buy a US listed ETF and you're not a US person, you will suffer 30% withholding on ETFs from the US or mutual funds, because they have to pay out income at least once a year. It's a requirement. So when they pay out, you suffer 30% withholding. You can file forms to potentially reclaim some of that. Alternatively, if you buy a UCITS ETF, they are allowed to accumulate as opposed to distributing. So you can decide, do you want to accumulate or distribute? But when they do distribute, you are not going to suffer that withholding. And the other challenge is buying a US mutual fund or ETF, you are likely to suffer US estate tax. And so most people don't want to pay estate tax to the US or pay taxes to the US. So buying a UCITS ETF means that will not happen for you. So I think understanding the differences in ETFs in terms of where they're domiciled, what they're investing in. Sometimes they optimize and don't hold all the securities. Some ETFs might be equal weighted, some might be tilted to factors. So understanding what you're buying, I think, is very important. And maybe just to add, my view on the ETF industry in Europe is actually much better than just 15% growth. Already this year, we've seen it's 20%. And I believe we'll continue to see the growth rate being higher than 15% going forward, as more and more of the managers that are in the US feel they want to have products that are UCITS and come to Europe, and we'll see the increasing growth in the European market.
Thank you very much. Our time has almost run out, but I still want to ask you last question. Passive Revolution Conference takes place in Poland, a country with a huge home bias. About 90% of our stock portfolios are local holdings. So the question is, how much of local stocks should we have in our portfolio? I will be a little bit provocative and I will say it's a great idea to have 100% in local stocks, because we know these companies, so we can trust them. Another thing is they are easily accessible, and of course, if we invest in local stocks, we help local economy to grow. So this is a great idea. What do you think about it? And if we could start, Jacek, with you this time.
All right, so I can say for myself that although I'm from Poland, I don't put all my savings into the Polish stock market. And I think that, by the way, there's no universally correct allocation, so that we can say it should be this or that. But I think on the other side as well that most financial experts would just suggest that if we are in Poland, much lower allocation should be to the domestic stocks. And I checked before our discussion today, the Poland's weight in the MSCI All Country World Index is less than 0.1%. So you can imagine 0.1, not 1%, 0.1%, less than that. So that tells us a bit, maybe if we are willing to put all our money into a single stock market. There are, of course, some pros of and cons of diversifying across many markets. Maybe let's start with the pros. So for sure, I think that if we will have more diversification, we can account on risk reduction. So when we are spreading investments across multiple countries, geographically, we can reduce some country-specific risks. And we had many cases in the history where just a single country was just collapsing. So basically, we had such case in Russia, we had such case in China, or we had cases like in Germany or in Japan where markets were dropping by 90%. Of course, it wasn't yesterday, it was long time ago, but we had such cases. So just to keep in mind. I think that it's worth to have the access and to use the access to the global growth. And once we have these possibilities with the ETF, it's worth to do it. And also we can diversify currency. So when we have the exposure to the global stock market, we can also have the currency diversification. But now maybe if we will start talking about cons of diversification across many markets, someone could say that currency diversification is not necessarily good because it's a currency risk, in fact. But I think that that it's still better to have this diversification in a global portfolio rather than to have everything in a single currency, especially if someone is from Poland. I think that one of the cons of diversifying across many markets is smaller familiarity, because investors, as you said, Artur, at the beginning, they feel maybe better to invest to stocks they know, the trademarks they know, so maybe it's for them more comfortable to invest in such businesses. Just to conclude, I think that although having some level of home bias may be beneficial to some extent, I think that personally, at least, that globally diversified portfolio can offer better risk-adjusted, and this is important, risk-adjusted return over the long term. Even despite maybe adding some complexity to it, but the exact allocation, if you would ask me, I think it should be just tailored to individual investor goals and risk tolerance. So there is no universal answer here. How much of domestic stocks, how much of the international?
Thanks, Jacek. Deborah, Jacek doesn't want to tell us exact number of Polish stocks we should have in the portfolio. I hope you will tell us.
Sorry, it's not letting me unmute my phone. I'm stuck on mute. I can't.
We can hear you.
We can hear you. It's fine. Yep.
Right. It says I need to unmute. Apologies. So I also cannot tell you how much. I think because you have to think for each investor, what is their tolerance for risk and how do they define risk? And if someone really only feels comfortable investing in Poland, it would not be appropriate to tell them they must invest somewhere else. But I think if you look at the guidance that is provided to the pension funds in most countries, they will even be told that it would make sense for the pension funds, which are investing on behalf of retail investors, to be investing a bit outside of their home country. So for most people, being more diversified than investing in your home country is beneficial. And you do see that most investors do invest in other countries. But also you can think about investing in other asset classes, as was just mentioned. So if you decide to invest, say, in gold, that will perform differently than investing in Polish equities. Also, bonds can perform differently than equities. So I think you can look at diversification in a number of different ways. But I think as long as you understand the risk and return profiles and the risk you're taking by either diversifying or not diversifying, that's the way I think you should approach this.
Thank you very much, Deborah. So, Andriy, from your point of view, what is the right proportion between Polish assets and foreign assets in portfolio?
Unfortunately, for you, I think I will follow the two previous speakers and will not tell you the exact number. But probably just to elaborate a bit more, like a small comment on my side on the currency diversification, what Jacek already touched. I think it is something which can be underestimated by the Polish investor, because if you're in Poland, you're buying everything in Polish zloty, so you can say, I don't care so much how is the exchange ratio between Polish zloty and USD, for example, as a hard currency. But if we go back to the history, I think probably most of you in Poland especially will remember then before financial crisis, the exchange rate of USD to Polish zloty was basically $1 was 2 złotych. And around 3-4 months later, it was basically like it was $1 for 3.5. So even if your performance of the index is good, if you convert it into the different currency in the hard currency, this performance will be basically disappearing. So I think this currency diversification is an important factor, because I know in such countries with own currencies, very often if you define a price of the things like a car, like a flat, very often you would not define the price of such things in a local currency, but somehow in your head you will connect it to some hard currency like Euro or USD. So if you earned a very good performance in a VIG index, but the currency lost 50 or 60%, it won't help you to reach basically your goal you could have. So I would say that is definitely something which worth to take into account, that the biggest risk I see here is also to be connected only to one currency, because you're already in the country, you receive salary in this currency, you are paying your bills in this currency. So it's probably not a bad idea to also have some diversification in other currency which are seen to be hard currencies.
Artur, if I may add something quickly. You're muted, Artur, but if you just give me a few seconds, I think that
Yes,
what Andriy
please.
said regarding the currency diversification is very important. And I think that from the perspective of Polish investors, especially investing in fixed income, they should keep, especially here, a focus on it, because the fixed income should stabilize the whole portfolio. So if we will have this part of portfolio in foreign currencies, it may happen that we will not have any stabilization, because in our local currency the volatility will be still high. So probably Polish investors should consider adding fixed income part in Polish zlotys, and going abroad, maybe they could consider more indeed than about the equity markets. But this is just a general comment.
Thank you very much for sharing your perspective in terms of ETF market regarding the trends. Thanks for sharing your insights regarding building ETF portfolio. As we can see, ETFs are simple instruments which help build us portfolio, but it's always not so easy, and we need to tailor our portfolio to our needs and our financial goals. Thank you very much, and see you next time.
Thank you. Bye-bye.
Thank you.